Everything you're about to hear is for education and entertainment purposes only. Whilst we are licensed, we're not aware of your personal financial circumstances. Any advice is general advice. Equity Mates operates under Australian Financial Services Licence 540697.
Equity Mates!
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.
Welcome to another episode of Equity Mates, a podcast where we explore what is possible in the world of investing. If you have just joined us for the first time, wow, what a time it is to be alive in markets at the moment. We're going to cover it all today. My name is Bryce, and as always, I'm joined by my equity buddy, Ren. How are you going?
I am very good, Bryce. I am very excited. I am strapped in. I am holding on tight, and I am riding this roller coaster of the past few weeks.
Crazy.
We'll talk about it. Look, in today's episode, we're going to talk about what's happening in markets because, look, it is a lot to keep up with. We're going to talk about Aussie tech because who says Australia doesn't have a tech sector? We're going to dive into some of the companies and some of the pretty amazing numbers. Adam Dawes is going to be joining us in the studio, and he's going to be having a look at Maddie's portfolio and suggesting some ways she could improve it. But Bryce, let's start with the news of the day.
News and markets.
Well, Ren, as I said, time to be alive. If you're not in the markets, you're missing out right now.
Yes.
Because there are sectors of the markets that are absolutely ripping. There are asset classes that are absolutely ripping.
Put it this way, I think there would be a number of people who are tuning into Equity Mates, maybe for the first time or maybe after taking a break over the past inflation and interest rate filled years, because I'm getting echoes of 2021
Definitely.
In today's market.
Yeah. A lot of interest.
I'm just waiting for NFTs to come back.
I know.
So look, there's a crypto conversation.
Yep.
There's a stock market conversation. There's obviously, it's been called the Trump rally, but I think, a lot of it is to do with him. Some of it's bigger than him. Before we get into the news of the day, there is one correction I need to make about an episode we released last week.
Nice.
So, if we make a mistake, we will always front up and acknowledge it. In our episode where we would invest $100,000 right now.
Check it out.
Good episode, aside from this mistake. I said that there was no Australian listed spot Bitcoin ETF. And that was wrong. There is at least one. It's EBTC by GlobalX. So if you want a spot Bitcoin ETF, that's your ETF.
Listed in Australia.
Listed in Australia. There's obviously a number over in the US. And it's a good time to be talking about spot Bitcoin ETFs because I think the conversation about markets should start with the crypto markets.
Oh, goodness. Well, where do you want to start? I mean, Bitcoin's absolutely ripping. At the time of recording, it had almost crossed the $90,000 mark. Yeah. Almost crossed the $90,000 mark. Up 30% since Trump. Which is phenomenal. I think on the last episode we spoke about Trump wanting to make America the crypto capital of the world.
Yeah.
And so not only crypto experts have been saying regardless of election, they're expecting this to happen.
Yes, yeah. You have a bet with Tracy from Crypto Curious that you were pretty confident you were going to win.
Confident, yeah.
What was the bet? That you said Bitcoin wouldn't reach $100,000 US dollars by the end of the year?
Yes. Yeah. 120, I think. But yeah, we'll go with the 100.
Okay. And you were very confident, but in the last week,
it's just a reminder of how crazy this asset class is.
Yeah.
You can watch it tick over by the minute. And I remember we were recording an episode this morning. We went in at 79,000 and it hit 88,000 by the time we were out.
Crazy.
It's just like, what is this asset class doing?
So since the election, Bitcoin is up 30%, Ethereum is up 37%. A number of the smaller coins are actually up more than that. And as you said, Bryce, Trump has spoken very positively about crypto. A number of the big dollar backers of Trump and Trump super PACs were crypto billionaires, so there's obviously some affinity there. The Securities and Exchange Commission, the markets regulator over in the US, the current head of it, chair of it, Gary Gelsner, not going to stay under a Trump administration. Trump will get rid of him. One of the SEC chairs who is expected to be Trump's replacement and put from commissioner into chair, came out this week and said America needs to stop its quote unquote war on crypto. So yeah, there's a lot of positive sentiment coming out of the US at the moment.
Wow. Yeah. But so the question is,
I also feel like it's just like such a momentum and sentiment.
Yeah, definitely.
Asset.
That was my point. Like,
it's like
taking away the election result may have fueled some of this. But if you were to like listening to the crypto guys, that they were always expecting this, regardless of who won the election.
Crypto guys are always expecting.
I know the cycle and blah blah blah, super cycle, blah blah blah. But it's definitely that asset class where, and I mean, we're even feeling it in the office. Like we're feeling like it's ripping so much. It's like you just want to be part of it.
Yeah.
And so it's just, you can just see how this thing operates. It's once it gets going like this, people are pouring in. I think I read that before coming in here that it's like record inflows into the ETF products that are happening at the moment. It's now the 7th largest. Like if you were to put it on the market cap with gold and the largest, it's like now the 7th largest asset/company in the world.
Bitcoin is now bigger than silver.
Well, there you go. So it's just got this crazy momentum behind it that when it gets in this position, it's in headlines. And
so I think let's take a break here, and I think you need to take a breath. And I think
I'm loving it.
I think we all need to take a breath because it is a really exciting time, but the FOMO gets really strong at this point. And I think let's just remember good investing principles and not get too swept up in the noise. I think having some allocation to crypto would not be a bad decision at a time like this, but remembering that as quickly as it can go from 79,000 to 88,000, it can fall the other way and then some. And, at some point there will be a profit-taking moment from this rally, and then crypto bulls would say it would then rise again, but there will be pullbacks. Nothing ever goes up and in a straight line, and so if you feel like you've missed your opportunity, there will be pullbacks, there will be other opportunities. There's also an argument that you can slowly average into a position this time if you want to, but don't go all in on crypto. The rule of thumb is still only invest what you're willing to lose.
Yes. Yeah. Until it gets to a position size that you then are like, I don't want to lose all of this.
Yeah. But only invest, in terms of money you're putting in. Don't blow your emergency fund on it. Don't sell your stocks and try and go all in on crypto. The FOMO is really strong. I'm feeling it. I think everyone is feeling it, but just deep breath. Okay. Now let's keep going.
It's good though. Loving it. All right. What else has happened? Elon has become the $300 million man again.
Yeah. Well, if you think Bitcoin was the best investment out of this election result, you'd be wrong. So let me paint you a picture. Let me give you a scenario. A president is elected who hates electric vehicle mandates, who believes that all electric vehicle tax incentives should be removed, and his vice president thinks that internal combustion engines should get tax incentives rather than electric vehicles. Mm-hmm. If that person is elected, what do you think the best stock...
Short Tesla.
Yeah, well, no, Tesla, Tesla up 40%.
It's unbelievable. Well, as we were saying, I think this is now become more of a proxy to Elon. It's just it's almost a massive meme stock in a way.
Definitely.
People are just...
Maybe it always was.
Maybe it always was, and well done to Elon. It's now over $1 trillion, and I see this as where Elon goes, Tesla goes. And Elon is now in the White House. Well, he's not officially, but it sounds like he and his own advisors are going to be in the White House.
Yeah. Well, apparently, so Elon, the reporting is he won't get a position, but he's been in the room. He and Trump have been having private lunches. Apparently, Elon was on the golf course with Trump, but I didn't get from that reporting if Elon was playing golf or just caddying for Trump. Yeah. Trump was on the phone to Zelensky from Ukraine, and then Trump put Elon on the phone.
I know.
So it's that's where we're at. So yeah, you're right. It's like a leverage bet on Elon's position.
Yeah.
But it is quite interesting. Elon is now over the $300 million mark again in terms of personal net wealth. I was having a look at the Forbes list earlier this week. The difference between Elon and the next closest person, so second on the ranking at the moment is Larry Ellison at about $230 billion. So Elon is a third richer than the second most rich person in the world. Second richest person in the world.
Yeah.
It's unfathomable.
It is. Yeah. You can literally. Well, look, he's paid his way to the White House. So I mean, it's pretty incredible. Anyway,
put it this way: he spent $130 million to back Trump.
Yeah.
and his personal net wealth has jumped more than 20 billion just from the Tesla shares alone.
It's unbelievable.
Put it this way. The difference between Elon and Larry Ellison is 5 Mike Cannon-Brookses.
Crazy. I can't even, I know. You can't. We tried to articulate the true size of a million versus a billion on our Instagram page a while ago. So if you're not following that, go and check it out. That's the type of quality content you can expect on there. But it hasn't been just Tesla that has shot the lights out. There are a group of companies over in the States that have gone incredibly well, up over 75%, and that is private prisons.
These have been the best performers of the Trump trade. Geo Group up 75%, Core Civic up 76%.
Unbelievable. So since Trump was elected.
Since markets closed on Tuesday the 5th of November.
Yeah.
So look, I think the reasoning here is it's around Trump's immigration policy and the mass deportation that they're promising. They're going to need to house these people as they are trying to deport them, and it'll be private prisons.
Yeah. Pretty simple.
It's pretty grim, but it is grim. Yeah.
Anyway, a lot to keep up with, a lot going on in markets. So make sure you subscribe to our daily newsletter where we send you headlines from around the world that will keep you up to date with everything that's going on. And boy, is there a lot.
And as we close this session, just another deep breath. It's easy to get caught up in the FOMO, but remember, good investing principles are the most important thing. They outlast whoever is president and whatever is hot in the moment. These momentum trades are just that. They're just momentum trades. At some point, momentum dies and people will take profits. You don't want to be left holding the bag. So be sensible. Obviously, ride the momentum if you want to, have an allocation if you want to, but be sensible about the amount you're allocating to it.
Or join me and be here for a good time, not a long time.
Well, that's the thing. It is not for a long time. So manage your risk accordingly.
In the intro, you said, who says Australia doesn't have a tech sector?
Well, a lot of people say.
I know, a lot of people.
Australia's full of banks and miners. To be honest, we've said that.
We have, but
I reckon you could dig up some stuff from maybe 2 or 3 years ago, and I reckon you in particular.
No, it wouldn't have been me because I
would hit the boring. Australia's so boring.
No,
really hard.
That's true. The ASX 200, but the tech index is a different story, and the reason I know that is because I have the ATech All Australian Tech Index in my portfolio.
Nice.
And I've just been doing a review. We're coming to the end of the year, just having a look at what's going on in the portfolio, and I was surprised. So the ASX 200 over the last 12 months, up 20%.
I mean, that
nothing
is
to shy away from.
There's nothing boring about 20% returns.
No, absolutely. Segment over.
You know what? If you include dividends, because I think that's just capital growth, I think over the past 12 months, including dividends, the ASX 200 is 24.5%.
Nothing to sneeze at. The NASDAQ, touted as the best tech index in the world, is up 36% over the last 12 months. But let me tell you that the ASX All-Tech Index, All Technology Index, over the last 12 months is up 50%. So Australia does have a tech index. So firstly, I want to break down the ASX 200 just as a reminder of what's pushing that 20%, because you're right, it's nothing to shy away from. You've had some big banks contribute pretty well. So CBA up 47%, NAB up 40%, Westpac up 53%, ANZ up 27%, and Macquarie up 40%. So where financials go, the ASX 200 goes.
Yes.
It has been dragged down a bit by the other side of the ASX 200, which is the mining sector. Yep. BHP down 8%, Fortescue down 21%, and Woodside, which comes in at number 11, down 25%.
Yeah, Rio, not on your list there, but Rio down 2%.
Yes, sorry. Yes, Rio also down. So that's dragged it. Which is why we're not seeing the 50%, but still pretty impressive. The biggest winner in the top 10 ASX 200 is Goodman, up 60%. So from a top 10, like the ASX, you can't complain with that, but that drives about 50% of the returns. So I think it's just a reminder that if you are investing in the ASX 200, those are the companies that are driving the majority of those returns. If you want to get a little bit more exposure outside of that, then there is the not an alternative, but I think of this ETF, the ATech, as a way to get some additional exposure beyond those big guys.
Yeah.
And it's done amazingly well. So let's look at it. What is the tech sector? Question over whether some of these are actually tech companies. But,
yeah.
But we'll go through them. So it's got Xero, Car Group, which was carsales.com, Computershare, REA Group, WiseTech, Pro Medicus, NextDC, Seek, Technology One, and Life 360. Those are the top
Life
10 holdings.
getting a bit of buzz. So which ones are there you say, are they really tech? I mean...
Seek? Is Seek a tech company?
Yeah.
I mean, it's an online listings, I guess so, but...
Is Etsy a tech company?
I guess so.
Is...
Shopify?
Shopify's definitely a tech company.
I know.
Yeah, I mean, I thought you were
NextDC.
I thought you were going to say NextDC
Yeah,
because it's infrastructure.
Yeah.
But I don't think any of these have been unfairly classified.
I'm not complaining.
It's just not like hard tech in the way that, not cutting edge tech.
No, there's no Atlassian in there.
Yeah.
Unfortunately. Anyway.
But look, who cares what you classify them as? Technology, not technology. What we care about is the returns they've been generating.
Yeah.
Because you go down the list and there's some pretty impressive numbers here. So these are all in the past 12 months.
Yeah.
So in terms of best performance in the past 12 months, Life 360 up 200%.
Yeah.
Every dollar you invested is now $3.
Yeah.
Pretty good.
Yes.
Pro Medicus up 136%. At some point, that price to earnings ratio has to come back, but it is just wild. WiseTech up 107%, and that's even after the Richard White
personal scandal
fumble.
Yeah.
Anything else up more than 100%? No, that's it. Then we've got Technology One up 66%, Xero up 60%, REA Group up 50%. And we go down from there.
Why I like this is a lot of those names are the names that a lot of the fundies come on the show and talk about as being good quality Australian companies outside of mining and banks. And so for me, this is just a nice way to get a reasonably concentrated all-in-one portfolio to a lot of names that we know are good quality without having to go and individually buy them.
Yeah.
And you can't complain with 50% return over the last 12 months. So Australia does have a tech sector.
So the ETF is very top heavy. The top 10 holdings are 79.7% of the ETF. There's only one holding outside the top 10. The 11th is Block at 3.6, and then everything else has a 1 in front of it or a 0 in front of it in terms of percentage weighting.
Yeah.
Perhaps we would say there isn't the depth of tech sector that you'd see overseas, but it's top heavy.
Yes, I'm certainly loving it. Part of my portfolio. And after this break, we are joined by Adam Dawes, who will be looking under the hood at the portfolio of one of our community members. But before we go, a reminder that Adam now actually offers a portfolio health check. So if you would like to get a professional review of your investment portfolio, head to the link in the show notes or head to equitymates.com/advice, and you'll get expert guidance that is aligned with your goals and risk profile that includes a tailored statement of advice just for your portfolio. It's $750. So if you're interested, head to the link in the show notes. To get a taste of it, we'll be right back with Adam Dawes and Pimp My Portfolio. Welcome back to Equity Mates. It is time for...
This is Pimp My Portfolio. Pimp My Portfolio.
That's right. This is a segment where we bring in a community member and an expert, and we get that expert to review the portfolio. And today our expert is Adam Dawes. Adam, welcome.
Great to be here, guys. Thanks so much.
Now, before we jump in and introduce our community member, a reminder that Adam is offering personalized advice on your portfolio. For $750, you can go and sit down with him and do a Pimp My Portfolio, where he'll actually provide you with a limited scope statement of advice. So if you want some professional advice beyond what you're hearing on the show, that is an option. Head to equitymates.com/advice. But without further ado, let's welcome to Equity Mates, Maddie. Maddie, how are you going?
I'm good, guys. How are you?
We're well. Thank you so much for submitting to Pimp My Portfolio. Looking forward to getting stuck into this. So, Ren, take us through it.
Yeah, all right. Well, Maddie's portfolio is a mix of some index ETFs, some thematic ETFs, one individual stock, and a small allocation to gold. So 60% of the portfolio are sort of country or region-based ETFs, A200 for Australia, the S&P 500 equal weight, not market cap weight. Interested to get Dawes' view on that. And then an Asia ex-Japan ETF and a Europe ETF. So that's 60% of the portfolio right there. Then about a quarter of the portfolio is thematic ETFs, battery tech and lithium, FANG Plus, and global agriculture. Then the one individual stock is Macquarie Group. And as I mentioned, then we close out the portfolio with a little bit of gold. So, Dawes.
Yes.
What's your nickname for the portfolio?
Well, we're going to call it the Lone Ranger because there's only one single stock in this one. The lowly Macquarie that's sitting in there, which is a great one, and don't ever sell it because it's a great business. But it is definitely a Lone Ranger amongst lots of other thematic ETFs.
Nice.
Yeah.
Maddie, what do you think?
Yeah, that sounds about right. I'm a bit scared of individual stocks, so yeah.
How did this portfolio come to be?
It's been about 4 years, I think I've been investing, and honestly listened to you guys and just started throwing my money at things that originally the A200, I'd heard about good to have an index fund, and then started doing a few of the thematic ones, and then started learning more about the core and satellites, and then went to the few other regional based index funds, started adding to them. So now I auto invest into those 4 every month, and when I get a little bit extra, I look at some other things, but haven't really bought anything new, just those other ones I've already had sitting there, sometimes top up.
Nice. Well, definitely can't fault the strategy because we obviously talk about that day in, day out here at Equity Mate. So, Dawes, what are your views?
Yeah, so look, it is a good little portfolio. There's a couple of things. Obviously, the thematic ETFs, you've got to be a little bit careful with thematic ones. I think index ones, you're doing really well. That's fine. Thematic ones basically come in and out of favour, and ETF providers put these lovely thematic ETFs out there to talk about lithium or battery technology, right? So, and we know that lithium's not doing so well at the moment, and obviously battery technology sort of fits in there. You're still in profit, which is great. So you've obviously bought that a while ago, the ACDC or the battery tech one. But yeah, just be a little bit careful about those thematics because they come in and out of favour, and you can be holding them unless you're trading them. I think you can be wrong-footed if you're not being active with them. So we still like the lithium story, but at the moment it's oversupply. Demand's still high, but there's oversupply, and so you're seeing all of the lithium stories being hit. Now, does that worry you that you sort of, it might not, but I think you've got to sort of try and build the portfolio with one, an index in mind, but then two, having some thematics in there, but not, I guess, as much. I guess it's not as much. I do like the food one, the global agriculture, and it is hedged. And we haven't talked a lot about hedging in any of these Pimp My portfolios. But as interest rates come down in the US dollar is falling and the Aussie dollar is going higher. And hence you'd like to have some more hedged products, and ETFs, most ETFs have a hedged product and an unhedged product. Most products, looking for that hedging at the moment just takes out that currency fluctuation and allows the portfolio to do what it's supposed to be doing, which is going higher. It is a little bit more expensive on the MER, the management expense ratio, because there is some hedging that needs to go inside of that. But that's something that you could potentially look at for any other new international ETFs that you're looking at, because the currency has really gone from 61, 62 cents, 68 at the moment, potentially could go to 72 cents. I don't think it's going back to parity, and the US dollar is falling. So that does hurt your portfolio a little bit with that currency movement. But overall, I think it looks really good. Cool. I prefer for you to have more weighting in the gold space, albeit the gold stocks have rallied and the gold has. I think that as interest rates keep coming down, gold will continue to perform. So you probably want to lift that up a little bit, and then certainly looking at don't selling those Macquaries. I think you're doing really well on that one. That's for sure.
Okay.
So, Maddie, there was a fair bit there, but I think some good tips. One that I mentioned when I was introducing your portfolio that I don't think we've seen a lot before in this segment is an equal weight S&P 500 ETF. So the ticker is QUS. So, Dawes, how do you think about equal weight v market cap weight?
So it makes sense to have an equal weight ETF, right? So here in Australia, because it's probably easier for us to talk about here in Australia, if you've got a normal portfolio that's, say, the A200, the banks and resources will make up over 30 to 40% of that weighting. Just in one resource company, BHP is 11% of our index, right? So by having normal weighted or index, it will then continue. And if BHP falls, the overall index will then pull back as well. But by having equal weight, it takes out all of those Commonwealth Bank, BHP, those big companies, Google, Microsoft, those kinds of things. And it basically then allows it to be even across the entire board. It is a great way to look at if you are seeing concentration risk. Here in Australia, it's the banks. Concentration risk is that, if the banks don't perform, then the rest of the market doesn't as well. So I like the idea of equal weight. You've done okay on it. Like it's sitting up okay. I don't think there's too many other equal weights out there, other America, Australia, and those kinds of things. That most people want to get the full advantage of what the index provides. But it is a good way to overall hedge the portfolio against too much concentration risk, which, here in Australia is the resources and the banks, and it allows you then for the rest of the portfolio to start performing. So I think it's a good call. And, you could continue to keep putting money to that if you're doing some dollar cost averaging at the moment.
Yeah, cool.
The challenge with it is that the top of the market is the one that drives a lot of the returns at some points in time.
Very much so.
So, yeah, I can understand. Maddie, did you have any questions for Adam?
No, that pretty much all makes good sense. Yeah, I have to admit the battery tech and lithium, that was one of the early buys a few years ago, and I have since learned I'm not focused enough on my investing to really follow thematics closely. So I need to accept that.
It's funny that you said you were scared of individual stocks before, which I think is a completely reasonable way to approach investing. Like if you don't have the temperament or the interest to really pay close attention to stories, you don't need to. But I just thought it was interesting because the way I now think about thematic ETFs is a lot like individual stocks. You need to pay attention to the story and keep up to date with news. So maybe that's how, the distinction between thematic ETFs and individual stocks may not be as large as you might think because they're different products.
Yeah, that's actually a very good way to think about it. And I think that's where my brain has slightly started pushing me. But
And you've got some European, you've got some Japan, you've got some US, that kind of thing, yeah? So that's quite good. You're sort of trying to spread yourself around the globe, as it were. Potentially looking at to sort of wrap it up, looking at sort of a world ETF or potentially there's a really good one out there, Qual. We've talked about this one, which is a quality ETF. That's got a hedge product in there as well. Potentially looking at something like that might just sort of wrap that portfolio up a little bit more and to give you a little bit more performance across the portfolio. But I think overall it's looking really good.
Well, Maddie, I think the headline is you're doing a lot right, and so you should feel happy with where you're at. And there's obviously some areas where Dawes is giving you things to think about, but I think you should keep going confident that you've made a great start. So well done.
Awesome. Thanks, guys.
Nice. Love it, Maddie. Well, thank you so much for submitting to Pimp My Portfolio. We certainly appreciate you sharing this with the rest of the community. So we wish you all the best with it and have a great day.
Well, thank you. And thanks for having this segment on the podcast. It's very helpful.
No, great. Well,
That's
we appreciate
good.
that.
Thanks, Maddie. We appreciate it. And we appreciate you being brave enough to share your portfolio as well.
The nerves are a little high.
If you would like to submit to Pimp My Portfolio, head to equitymates.com/contact. All the information is there. And if you would like to speak to Adam and get some professional advice on your portfolio, head to equitymates.com/advice. We'll hook you up with him and you can get that process started. But Adam, as always, thank you so much.
Great to be here.
All right. Well, Bryce, that does it for another episode of Equity Mates. A reminder, if people want more of us, we produce a lot of content, but there is always more. Head over to Get Started Investing. It is the podcast, also hosted by Bryce and I, really covering the basics of investing, everything you need to get started on your investing journey. This week we released an episode, Best ETFs for Quitting Your Job.
Yes.
Who wouldn't want to quit their jobs and live off their investment income? Next week we're going to be releasing an episode, 5 timeless rules of investing that everyone should know. So if you want more investing content, and if you want more of Bryce and I, head over and listen to Get Started Investing. But Bryce, that'll do us for this week.
Sounds good.
You have been listening to an Equity Mates Media production. In the spirit of reconciliation, Equity Mates Media acknowledges the traditional custodians of country throughout Australia and their connections to land, sea and community. We pay our respects to their elders past and present and extend that respect to all Aboriginal and Torres Strait Islander peoples today. This podcast is intended for education and entertainment purposes. Any advice is general advice only and has not taken into account your personal financial circumstances, needs, or objectives. Before acting on general advice, you should consider if it is relevant to your needs and read the relevant product disclosure statement. And if you're unsure, please speak to a financial professional. The hosts of this podcast and their guests may have positions in the companies mentioned. Equity Mates Media operates under an Australian Financial Services Licence 540697.